You're listening to Chart of the Week. I'm Giles McMullen. I'm chatting to Bill Rook from Redmayne Bentley. Bill, we're going to start by looking at the Ftse 100.
Yep.
How are things looking on this chart at the moment?
Well, choppy and dull. We haven't gone through new levels. What I've got here is the Ftse going back to 1990, which is a good few years, of course, and up to current date. And above that, I've got a rate of change of 10 months. It's the monthly chart, I should say. And I've taken moving averages off because they're sometimes confused a bit. But what I've done here is put vertical lines on here, Giles, to show you when the rate of change on a 10-month view, when it starts breaking below zero. The last time I did that was December 2008, and that was quite a good, 2007, and that was a very good point of coming out of the markets, about 6,000 odd, and you re-enter at about 4.8 in the late, I suppose it is in the system here, August 2009.
Yep.
You could have said, I've gone in earlier, but that was the time. Now, as we stand now, it's bouncing off the zero line, and the jury's still out. It's a sideways market. It's close to sort of saying, please sell me, but actually it's a hold at the moment. The last time, I suppose the last buy signal was pretty good in 2003, and then the previous sell to that was in 2000. So that was pretty good.
That was a good sell signal.
Wasn't it good? But we had a false one before that, Giles. We just looked to the left of the line there. There was a false signal beforehand. Yeah. So we can have this sort of movement here. So I suppose when we break down below 5,000, that will be bad for the market, certainly. So we've got a bit yet to go, and it may not happen yet, but if it does, we're braced to go into short in the market. But another time, prior to those things, in the 1990s, we've had short, sharp drops here, followed by rallies.
Yes.
And that's sort of, and that's depicted. It's a useful benchmark, this 10%, the ROC of 10. Looking back at 10 months and see what the last 10 months have done, and if it's lower this time, if it's into negative territory, it's plotted on the market. So it's generally, we've had a good run so far, but cooling off and wait and see, Giles. It's a wait and see market.
Okay. All right. Thank you very much for that, Bill. Now let's have a look at what is MATD.
MATD, this is Mongolian oil, petrometad. And it's what I've done this week, Giles. I haven't told you, but I've chosen shares. They all have one thing in common. They all have one chart shape, and that's a flag. And that's the flag on the right-hand side,
right.
in the two sandwiched between those two horizontal lines.
I see.
And that's really exciting chart pattern. One of my favourite. And the percentage rate is so high on actually them coming good that it's worthwhile noting that there are three of them in the market at the moment amongst all the gloom that there is there, or surrounding it. I suppose inertia in the market, I should say. But this thing, when it breaks above 156, 157 level, this could motor. This could. We're looking for another. If it does go according to plan here, looking for about another 70, 80 pence on this share. So it could be quite exciting this share. So. It explores in Mongolia, and this is petrometad. So it's the interesting points have been on the chart, looking at the indicators there, the massive amount of volume at the bottom going in when it started changing at 50 odd. The sort of comb-like strands at the bottom that's on the chart there suggest we've got excessive volume going in on the short-term basis. The long-term trend of volume is on the up. The moving averages are certainly pointing the right way. Short-term, these are. Moving average looks fine, crossing over, and that's what I want to see when the volume goes through. And it's recently crossed over again. Where that vertical line comes in, Giles, that suggests we've got a situation where we have the stochastic being very low and the MACD turning up, which is sort of the magic sort of combo for entry. So that's sort of a trend change being from an oversold and beginning to go positive. So that's really rather good, this one, potentially. It's up today, quite right. It's up 2.9% today, so looking very good there, and further upside expected.
Great, okay. Now, FPM, what's that?
Which one, FPM? This is Faro Petroleum. Right. Now, we've heard about Dana, and it's Dana's got 27.53% stake in this company. So, and this is another little flag coming in here. Oil discovery. This is in Norway. This one, and this one here, I reckon, has got you see the red line on the chart there, just sort of as it's sort of it's sort of above the share price at the moment. This is the 65% above the 200-day line, and if you look on the left-hand side, how that provided immediate resistance for the share price in October last year, 2 years, right? Yeah, to go through. So I'm expecting a 210 price on this when it breaks out of that little channel. So that's a very nice positive chart here. What we haven't got this time, Giles, is we haven't got the oversold on the stochastic and the MACD changing up at the same time. We haven't got that this time. What we got is a flake of volume, a good raft of volume coming through in July, and you could see the volume trend has suddenly pushed up there, and that's always good to see.
Yeah.
So it's a nice little upward channel. Would expect to break out towards the 220 level, 220 level. This is an interesting one, I say, because of the stake held by Dana. Dana's sort of subject to hostile bid from the Koreans. Whether that goes through or whatever, it would be very interesting to see how this pans out as to what's going to happen to this company, because virtually it's in play as it stands.
Great stuff. All right, Bill, thank you very much for that. Let's move on to the next one, which is Encore Oil.
Encore Oil is, now this is there now. Remember that little setup I said earlier?
Yep.
The stochastic coming in from the low and the MACD, and what have we got on that vertical line? It didn't get it beforehand. I can't say we can jump in beforehand, but what I can tell you is when that came in, that's the setup for the next move.
Right.
So at 30 pence, you can't buy, I mean, to try and look at 15, this is a common thing that investors do, is look back at the chart and say, oh, I can't buy at 15. Well, you just don't do it. It's not there. Otherwise, there'll be hundreds of shares you choose from. Why this one now? Then why this one then? Well, several things. It made a big oil find in the North Sea. This one, part of the catcher find. It's sort of that it's with a couple of other oil companies. This is one of the smaller ones that found the oil. So a party to find the oil. It's gone to the 65% above the 200-day line, which is very, very positive, and it's held it. Not many shares can do that. Generally, only smaller companies can do this because of the amount of volume that goes through and supporting it with the good news flow. So this is basically a change of company direction when that happens. So the trigger point is where the vertical line comes in after it breaks through. You're getting in rather late, but if you get in around the 30 pence level, you're looking at a share price now in the region of 66. So it's not bad even getting in late, but you're just sort of mindful that the setup was then, not beforehand.
Yep.
Otherwise you're creating false expectations and you lost the plot. So, but again, a flag situation, we're stuck in that channel now, waiting for the breakout above 67. We've got further upside here, John. And it's forecasting where can it go from here. I would say £1 looking at that chart from where it's come from. So if you can be patient and wait for it to break out, that's the upside short term. Again, a very, very interesting oil play. So all small oil plays and very, very interesting so far, all these three.
Yes, they do. And finally, Bill, we're going to look at, is that Blinks?
Blinks, and you might have missed it. This is what the headline was in the Investors Chronicle. It's one of my old headlines. But again, Giles, look at those vertical lines there. What do they have in common? They have in common coming out of a stochastic which is oversold, and an MACD which is going into positive. The one on the left-hand side is fantastic. Look at the moving average there, how the share price is stable at that moving average for such a long time that everyone's forgotten about this share. And then suddenly it comes through some news flow probably that suggests that its marketing and its product is going forward. It's got a search engine thing. It's a very, very exciting product, perhaps on the video front for the new Vista Windows setup. So it's sort of that news filtering through, new product setup, new markets for that coming through, new setups from that. And with that, we have another vertical line in July, and this is sort of says, please buy me. Coming in from an oversold on the stochastic and MACD crossing zero, short term, looking very good. The volume trend is very good. The volume follows that afterwards, and that one would have been a 42 sort of very short play up to 75 pence. Now, what we're seeing now in this chart here is a consolidation. Volume should be dropping off, as we hope it would do. This is an ascending triangle coming in here, Giles. If it breaks 77, this is very bullish on the upside. We could see over £1 on this share. So this one is a very, very interesting share. One that was mentioned in the Investors Chronicle. I think we've got this one probably right on this one here. The chart trend looks up. The volume levels are dropping off, suggesting it's all set up, ready to go higher as and when it breaks.
Fantastic. Well, thank you for finding those, Bill, for us.
That's all right.
We'll chat again next week. That's Rook from Redmayne Bentley.
Okay, John. Pleasure.